What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had a mixed bag with the S&P 500 flat, the Dow Jones making a brand new all-time high, and the Nasdaq 100 still selling off a little bit. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we see SPY going absolutely nowhere today, only closing up 0.03% higher. We did have a really nice bullish gap up open, and we did close that gap that we had opened up yesterday just around 417.80. So the gap above is closed, and we did close right above that 20 simple moving average yet again, which did act as intraday support. So the SPY support level at 415 is still holding up, and we can see the moving averages are still in a bullish trend, and they are starting to stack up right around 415. This creates a strong confluence area of support, or it could also mean that a big move is coming. Also note that we're still getting a Bollinger Band squeeze, and you can see the upper Bollinger Band is negatively sloping while the lower Bollinger Band is still positively sloping, which means the Bollinger Bands are contracting, and that's called a squeeze, which does imply that a big move could be coming in the next couple of days. We'll also have a very important squeeze to talk about on the VIX as well, and this could be telling us a very important story on what's coming in the future. So while SPY has been very boring and it's basically gone absolutely nowhere for about 3 weeks now, it is getting ready for a big move, and remember these big move squeezes could be to either direction. So we saw something very similar with the triple Qs, and that squeeze did fire to the downside, and now you'll see that the triple Qs are trading all the way down at the 50 EMA. So we need to understand that our downside risk on SPY is a lot higher than it is on the triple Qs. The triple Qs are already trading down near their 50 EMA, but SPY's 50 EMA is all the way down here right around 404. That doesn't mean we have to go back down to the 50 EMA, but that is definitely where you want to define your risk on SPY. Remember, we would need to close below the 20 simple moving average to start getting weakness because we are still in a bull trend with strong bullish price action, and we still have the bullish trend on SPY. So a close below 415 on SPY would be a warning sign, and then we would be retesting critical support at 412 and 406. So watch the critical support levels very closely and understand that price action closing is on a daily chart. Upside resistance is still the previous all-time high right around 418.50, with previous all-time high resistance at 420, and then our price targets are still at 423 and about 426. Remember, to get to 423, we need to get SPY to start closing back above 418.50. We only had one solid close above that level, which is not enough. You need to see 2 to 3 closes over that level, and right now we just have one. So get ready to prepare for this Bollinger Band squeeze to fire to either direction, and make sure that you're still managing your risk very closely at these levels. Remember, we're trading near all-time highs, and that's not the time to be over leveraged or all in this market. Next up is the Nasdaq 100 triple Qs, and remember on the Nasdaq 100, we also were getting that Bollinger Band squeeze, and ever since that squeeze started to fire, we are seeing lower prices in the triple Qs. Now the thing to note about the triple Qs is we've now tested the 50 EMA as support for 2 days in a row. The 50 EMA is right around 329, and we did close back above that level yet again today. That's 2 days in a row that the price action is below the lower Bollinger Band, which does imply that the price action could retrace to the higher side. Now don't forget, we will have resistance at the gap, which is going to be 334, and that gap will close right around 335.70. We still have upside resistance at 337. The 20 simple moving average is also right around that level, and we do have the previous all-time high resistance right around 342. So remember, critical downside support is still this 50 EMA, which is right around 329, but we also do have this trend line of support. The trend line support level is right around 327.50, and the gap closes below are at 325, 321, and 315. Also remember that if we are going for another leg higher that could push us into the 350s, we need to stay above this critical level of 324.20. If price action goes below 324.20, the hopes of the triple Qs getting to the 350s is significantly reduced, and it does mean that we'll likely close the gaps at 321 and 315. So this is a very critical level for the triple Qs, and we could likely see a bounce off of these levels because this is a very strong support level. If the trend line breaks, watch the critical support at 324.20 because that's going to be the final level of support before we start closing these gaps below. Also remember, on the triple Qs, we no longer have a bullish trend. So we no longer have the trend in favor of upside. So the price action is the most important thing to watch right now because the price action gives us immediate information of exactly what the triple Qs are likely to do. There's no strong trend in either direction for the bears or the bulls, and we're stuck between a rock and a hard place right at the support level at 329 and the resistance level right around 337. Next up is the Dow Jones, which did close at a brand new all-time high today. The Dow Jones continues to show a lot of strength in this inflationary market, and we still see strong price action and still holding up above that bullish trend. Now that we did get another price action close to an all-time high, it does mean the Dow Jones could make a run up for the next price target at 347. Note the Bollinger Bands are getting very tight on the Dow Jones as well, and we could see a nice move to the upside from here as long as we stay above this support level right around 341. Remember, the critical reversal level for the Dow is right around 339.50, which is that 20 simple moving average, with the final level of support that's critical right around 337. Next up is the Russell 2000, which dropped about 0.4% today, and the Russell 2000 is also in the similar situation as the NASDAQ 100. It has 2 days in a row of retesting support at the 50 EMA, which is right around 221. The Russell 2000 is trading below the 20 simple moving average, and we see there's no longer a full bull trend. So the critical support for the Russell 2000 is going to be the 50 EMA at 221.60, the resistance trendline breakout support level right around 220.8, and then below that, the Russell 2000 will start looking bearish, and we will have a critical support level right around 215. Upside resistance is still going to be that 20 simple moving average at 224, and then our resistance levels at 227 and 230. On Arkk, we still see that we're in a full bear trend, and the price action is still trading below all of the moving averages, and we did fall out to the downside on this wedge. It does look like Arkk is going to retest support right around 109, and we do have to remember that Arkk is in a bear trend, so this is not a buy the dip scenario for Arkk. We need to see the price action getting back above the 50 EMA and seeing some kind of bullish trend coming back to the Arkk ETF before we get bullish on this ETF. Right now, the price action and the trend are both bearish, so we want to have a bearish bias for the Arkk ETF. Next up is the VIX, which is our fear indicator, and remember the VIX is telling a very important story because we also have a Bollinger Band squeeze. Right now, if we zoom out a little bit, we can see the last time the Bollinger Bands were squeezing on the VIX was on March 2nd, and we did see the VIX have about 3 to 4 days of volatility to the upside before the VIX did fire that release of that squeeze, and we saw the VIX fire to the downside, and we did have a very bullish month of April because of that. This could be a very scenario for the VIX, or it could fire to the upside. So this Bollinger Band squeeze will eventually release a lot of this energy to the upside or to the downside. So to the upside, we need to watch the VIX level right around 20. If the VIX continues to close above 20, which we have yet to do, that would be an indication of a much larger, deeper stock market correction. As long as the VIX is below 20, this is still a possibility that this is just temporary volatility before the stock market makes another leg higher. So if this Bollinger Band squeezes to the upside, look for VIX levels into the high 20s, and that would signal a very volatile, deep stock market correction. If this squeeze on the VIX does fire to the downside, that would signal that fear is out of this market and we're about to see all-time highs across the board. So watch these VIX levels very closely, and right now the VIX is still trading below that 50 EMA, which is right around 19.5. Next up is gold, which is now on a full bull trend, and we see the price action holding up above the 5 EMA. Gold looks ready to run up to the next price target, which is right around 1829, with downside support at 1776. Next up is silver, which is also now on a full bull trend, and silver is at that price target at 2650. On a break and close over this price target, we could go to the next leg higher at 2760. Downside support on silver is going to be right around this 2650 level and that 20 simple moving average right around $26. On Bitcoin, we're currently up about 7%, and Bitcoin is back above that critical $55,000 level. There's a little bit of a whipsaw going on here, but we can see that Bitcoin is trying to go back into a full bull trend, and if it can continue to close back above 55,000 while going back into a bull trend, we could see new all-time highs on Bitcoin. We still have resistance at 61,000 above, and that will start signaling if we can get a close over that level, we could go to the next price targets at 67,000 and right around 75,000. Critical downside support is still 55,600 and 48,700. Next up is Amazon, which dropped 1.25% today and closed right on top of that support level at the 50 EMA, which is right around 3271. We have support levels at the 50 EMA at 3262 and 3209, with upside resistance at the breakout at 3363 and 3458. Note that Amazon did lose its bullish trend, so the price action at these critical support levels is key because if they break down, it does mean that Amazon could be going much lower. Next up is Tesla stock, which did drop about 0.39% today and did close right above support right around 670. Remember, Tesla is in a consolidation wedge, and we need to see if it's going to break to the downside or the upside. A downside breakout on Tesla would be a close below 670, and we would have support levels at 618 and 557. Upside resistance is the 50 EMA at $700, $718, and the resistance trendline breakout at $740. Next up is Apple stock, which actually went up a little bit today, going up 0.2%, but still closing below the 50 EMA. That's 2 days in a row of Apple closing back below the 50 EMA, and Apple no longer has a bullish trend. We need to see Apple get above resistance right around 129 and try to restore this chart before it gets overly bearish. Downside support levels are going to be 126, and if that level breaks down, we could be going all the way back down to 119. Upside resistance is going to be 129, 131, and that 20 simple moving average at 132. On the financial sector, we went up 0.82% today and closed well above the 5 EMA, and you can see the financial sector is still in a very strong bullish trend. The industrials went up 0.1% today, still closing well above that 5 EMA and still holding on to the bullish trend. The healthcare sector went up 0.18% today, closing above the 5 EMA and still holding on to the strong bull trend. The energy sector went on a monster run up today, going up 3.23%, closing well above the 5 EMA, and we can see the bullish trend is only strengthening from here. So going back to the S&P 500, you can still see that we do have very bullish sectors across the board, and we are just seeing the weakness in the tech sector currently. If the tech sector can get back on the bull, we're very likely going to see the S&P 500 breaking out to new all-time highs. Pay very close attention to the VIX squeeze, because if it does fire to the upside and we see the VIX getting back into the 20s, that could signal a deeper stock market correction. But right now we still have very bullish trends and price action in the sectors that are driving the S&P 500. We just need to see the tech sector find a bottom and stabilize, and as soon as tech does that, we should see new all-time highs. But remember to protect yourself to the downside, because we could still see big moves in the stock market after this Bollinger Band squeeze fires. Right now, the S&P 500 is trading near all-time highs, so this is not the time to be over-leveraging your accounts. Pay very close attention to the price action, and note that the stock market is building up a lot of energy, getting ready for a big move. Remember, on the Stocks Channel Discord, I'm giving you intraday updates and analysis to help you stay on the right side of this market, and I'm bringing new trade ideas to you weekly to help you absolutely crush this market. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description of the video. So next up, let's take a look at our trade ideas, and first up is Shopify, and we see Shop dropping 1.98% today. Shop is closing below the 50 EMA for 3 days in a row now, and remember that our critical support level is right at 1098. If Shop closes below 1098, it's time to cut it out for a loss, because it could be going lower. But right now, if Shop's holding up above 1098, we still do have upside price targets at the 50 EMA at 1170 and right around 1241. Note that Shop has no trend in either direction, so the price action at these levels is key. So critical support is 1098 with the critical resistance breakout right around 1169. Next up is Disney stock, which dropped 1.49% today, and Disney is getting very close to that support level right around 181. Remember, if Disney starts closing below 181, some percent below that support, you want to set your risk level, and you do want to go ahead and exit this trade for a loss. We have earnings coming up next week, and we still have plenty of time for speculation going into earnings. We need to get a breakout of the resistance trendline breakout, which is now right around 183.70, with upside price targets of about 188 and 191. We will need to get back above the 50 EMA as well, which is right around 185. So this is one of the best risk reward setups you can get in a stock when it's trading at a critical support level. All of your risk is defined by a close below that support level. So if you enter the trade as close as possible to support, you could set your risk below the support level, and then you could manage exactly how much you're willing to lose, knowing that the upside potential is the price targets at 188 and 191. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.